Welcome to the Registered Investment Advisor Podcast, where financial services marketing expert Seth Green interviews experts, executives, and top producers to share can't-miss tips on how they successfully manage their financial service firms, grow their businesses, create great relationships, and influence the industry. And now, here's your host, Seth Green.
Welcome to the RIA podcast. This is your host, Seth Green. Today, I've got the good fortune to be joined by Russ Piazza, portfolio manager and co-founder of Front Street Capital Management, portfolio manager for the Tarkio Fund, and many, many other things. Russ, thanks so much for joining us.
Thank you, Seth. It's a pleasure to meet you.
Our pleasure as well. Let's go back in time a little bit. You started your investment career back in 1977. What inspired you to get in the business?
You know, I gave that some thought. It was almost an accident, but we did start in 77, and I was with Crowell Weedon Co. I was 21 years old and pretty much clueless is how it all got started.
Okay. And then obviously your journey evolved. You went to Piper Jaffray and became a portfolio manager there. What inspired you to start Front Street Capital?
Yeah, so basically while I was at, I had graduated from the University of Montana, grew up in Southern California. When I graduated, this was particularly Missoula, Montana, which is a pretty cool place, but the economics here were not very stellar, particularly back then. So I went back down to Southern California and got a job at Crowell Weedon Co., which was somewhat of a miracle at the time. And they had no training program, no official training program. So there was a partner in the firm that kind of took me under his wing. His name was Ben Robinson, who we had a relationship until he passed away here a few years ago. And he ran discretionary fee-based equity portfolios. And that was intriguing to me. And it got us thinking about the way to approach this business is more as a manufacturer than a distributor. And we've had that concept in our mind ever since. I was in Southern California. Our office was in Leisure World. I was 21 years old, trying to develop a fee-based or an aggressive equity strategy in Leisure World, which wasn't a very good match. So I was failing badly and wanted to get back to Missoula, obviously, as anybody would, at least from our perspective. And there was an opening at the local Piper Jaffray office. There was only one older gentleman in the office at the time. And there was a small book, a small nucleus of clients that needed to be handled. And so it gave me the opportunity to get kickstarted a little bit.
Well, that makes a lot of sense. And then talk a little bit about the formation of Front Street.
Yeah, so the where the business evolved was I stayed with this concept of running equity portfolios, which was not something at the time in the industry that was really embraced, to say the least. And but we kind of kept creating it, and then the industry kind of got the idea that maybe a discretionary fee-based program might be something that would work at a firm like Piper Jaffray. And so we were kept pushing and pushing and kind of became the prototype for the Piper Jaffray. At the time was called the Navigator program. And we had originally, through the Ben Robinson's tutelage, we were originally focused on a Ben Graham style of investing, which we had some success with. But over time, it became a little bit unsatisfying as to buying just cheap stocks. And there was something missing for me. And then in 1988, I actually read an article in Forbes, and it was an interview with Phil Fisher. Warren Buffett calls himself part Ben Graham, part Phil Fisher. And that was really intriguing to me. And Warren Buffett had done the introduction to the interview. And I read it, and I was very inspired. And Phil's idea was that if a company was managed in a very specific way, that they would get the most out of their employees. And then in turn, that company would have an advantage over their peers. And that was super intriguing to me. And I read everything that he had written. It was about 4 books at the time. The most popular was Common Stocks and Uncommon Profits. Then I went on a search to try to identify a Phil Fisher style company. In my search, I stumbled across a company called Galileo Electro-Optics, which was in Sturbridge, Massachusetts. And due to lack of time, I won't go through the whole story, but there was a whole series of unbelievable coincidences that suddenly I had identified that Phil Fisher actually owned the same stock. And he owned only 7 stocks at the time. And he was 82 years old. I was in my early 30s. And so when I found this out, I immediately wrote him a fan letter, and he responded immediately. That was really set the direction for my career and our career here at Front Street Capital. I had a relationship with him for a few years until he kind of kicked me out of the nest and was just tired of me bugging him all the time. But when I did, the first time I met with him, the first thing he said was that, and this was 1988, what I really needed to fully understand was everything that was going on in Japan at the time. And that led to the Deming management style, and then the Toyota production system. From that day on, we became students of this whole process of companies that created a culture that we thought would get the best out of every employee in the organization. And through that work and studying Deming, put together a criteria which pretty much has been tweaked a little bit, but has been unchanged really since those early days. And the idea was to take the Deming management style, or the total quality management is what it was called at the time, or they call it Kaizen. It has evolved now into what is termed as lean, which we don't think is a very descriptive word for the process. But what we tried to do was take the human principles out of this system so that we could identify companies that weren't TQM, but use the same principles. And if we got a minute, I'll quickly go through that criteria. Is that all right?
Yeah, I would love to hear it.
Yeah. So, we think if you're buying a stock, you're becoming a partner in a business. And the most important thing in a partner is that you trust them. They have a high degree of integrity. And recently, in the last couple of years, we've added to that they need to have a fair amount, a lot of humility to be able to execute this effectively. Second, they have to have a long-term focus, and both Phil Fisher and W. Edwards Deming were the ultimate long-term thinkers. Phil actually owned Motorola for 52 years, I think. We like companies that have a purpose, that the objective of the company is not to shove as much money in their pocket as fast as they can. The objective is to fill some societal need. And we think companies that have a purpose, there's a greater passion for the business, and the culture gets recreated accordingly. Deming's idea was that human beings naturally compete. And when people compete, they don't share information, they hoard it for themselves. So you got to find internal competition everywhere in the organization and root it out anywhere you can find it, that internal competition is a disease. And so you got to figure out ways to break down barriers to get folks to communicate effectively, either by department, by employees, up and down the hierarchical structure between the company and their suppliers, everywhere the company operates. Deming also is a big believer in that empowering employees to be able to make decisions without repercussions if they make a mistake, so that everybody in the organization at all levels, they're learning all the time in little bits in Kaizen, continuous learning. And then the idea is if everyone is learning and getting better and better at what they do at all levels of the organization, and then you flatten the organizational chart and break down barriers so people can communicate, then all this knowledge gets compounded over time. And what we do is all about compounding, both from a learning perspective and obviously compounding our clients' capital. And the last bullet point is all is for naught unless they're careful with how they allocate their capital.
That makes a lot of sense. And those are great criteria. Talk a little bit about what differentiates Front Street and then talk about the fund.
Yeah, so Front Street, our purpose is to build meaningful wealth through compounding over long periods of time. And what that means is trying to get our clients to do nothing. And that's a really difficult thing to do. And so our fund, we had a good track record for about 20 years, and then we launched Front Street. And so for that to be able to, and that track record was non-publishable. So obviously we wanted to have a publishable track record, but there's a slew of other reasons for us. Launching a fund was the best avenue. And by the way, really, that's the beauty of the RIA model, right? That you could take this anywhere you want. You know, our business is a little different than a lot of RIAs. And that's the cool thing about the RIA model is that you can create your own, what you think is important and what you value. And it might not be the most lucrative or may not over time, but enabling the RIA model enables you to do that, which we think is pretty cool. And so we launched the fund in 2011. It reinforced this idea for us as trying to be a manufacturer versus a distributor.
And you've been through quite a few turbulent times and stayed the course. What advice, we're not asking for any specific recommendations, obviously, but what philosophical and investment advice are you giving clients now in today's turbulent market?
Yeah, so our biggest challenge, which I think is one of your normal questions, by the way, but our biggest challenge is trying to get people to live through all the fluctuations. We don't go through a bunch of gymnastics to try to smooth it out. We try to get them to live with it, which is a challenging thing to do. But we think the only way that you can really compound at meaningful rates is to have it uninterrupted. And the only way it can be uninterrupted is to live with the fluctuations. So that really is our greatest challenge. So what we've done, and our fund has 30 stocks. And so even a lot of more volatility than the index, which makes it even more difficult. So what we do is we only charge for our fund. And then we wrap the index, the S&P 500 index, around our fund as a way to sort of provide a protect our little investment in our fund so we can continue to, compound that over time. And we think that's how we grow our business, is by compounding our own and our clients' money. And the hardest thing for us was over the last 13 years, that when interest rates went to zero on the short end and 1% on the long end of the treasury curve, that we felt it was the biggest bubble of all time. And so we avoided buying fixed income securities. We thought, a couple of years, turns out to be 13 years that it took for rates to finally start to normalize. But that really made it difficult for us because we had no place to put money for 13 years that didn't fluctuate at all. So yeah, you're correct. It was a battle for the last 13 years to keep people engaged. And it's always a battle to keep people engaged. The hardest thing for an investor to do is nothing.
Yeah, very true. Your passion is obvious. What do you like best about what you're doing?
Well, we like our team the best. We've got a 5-person team here, and the sort of the pinnacle of TQM is a cross-functional self-directed work team. And that's what we have been blessed with creating here. So Michele Blood we've been together 38 years. She does all the operations. Ginger Belker started when we launched Front Street in 06. She does all the compliance. My son Dominic and Jeremy Brown both do the research. And by the way, we do one other thing that's sort of interesting to learn more about how companies are managed rather than just going out to visit them. We've actually taken an ownership stake in 2 companies locally that have more than 70 employees, so that we can go to the Gemba, as they say, and really learn how companies are managed and what it takes. And believe us, it's a lot more challenging than we thought it was. But it's really gotten our relationship with our publicly traded companies much stronger, because when they hear that we're actually trying to do this ourselves, the relationships have grown exponentially, and the learning, we think, is compounding at an exponential pace now.
Well, that's incredible. We know your time's incredibly valuable. We greatly appreciate you spending some of it with us. This has been Seth Green with Russ Piazza of Front. Is frontstreetcap.com the best place to go for everyone to learn more?
Yeah, there's 2 websites. There's Front Street, the Front Street Capital website. There's a Tarkio website. You could Google either one of them. If you add Missoula, Montana to that, they'll certainly pop up. But the real way to find us, the symbol for our fund is TARKX. It's the Tarkio Fund. And if anybody is interested, if anybody believes that how you treat your employees is the best way to compound money over a long period of time, and that they're willing to live with a lot of fluctuations, then we might be a good fit. If not, we are not a good fit.
All right. Well, we greatly appreciate your time. Thank you, Russ. Thank you, everyone, for watching or listening. We'll talk to you or see you next time.
Thank you, sir.